Hey everybody, Economic Ninja here. I hope you are doing well. I am in Las Vegas still. I can't wait to go home. Creepy hotel room. All right, enough of that. Enough of me. Let's talk about you. Let's talk about real estate. Let's talk about how everything is crashing. I know, if you're new to this channel, you're like, how is that guy like so happy? This is what we do at the Economic Ninja channel. We look at cycles, market cycles. We're typing markets. So I'm not gonna buy real estate at the top. I'm gonna buy it as it's crashing and try and get as low as I can to the bottom. We've been talking about a real estate spike and an eventual crash for about a year now, and we're seeing the evidence of it right now. So the market is softening. Guys, I'm gonna link this story below. It's entitled "The Market Softening, Full Stop, Zillow Plunges After Company Issues Dire Housing Outlook." I have a feeling it's a little bit more than that, like their company's going down because they're losing earnings. All right, here we go. It's one thing for a fringe tinfoil conspiracy theory website such as this one to warn. Sounds like my channel. Repeatedly for months, with mortgage rates rapidly approaching 6%, the U.S. housing market is on the verge of a vicious collapse, as discussed articles such as these. Housing affordability is about to crash the most on record. Cracks appear in housing market as sellers begin to lower asking price. I've already seen that in my area. Biggest housing affordability shock in history incoming, and worst ever U.S. home affordability is just 0.5% away. This is incredible. It says it's another for the one of the biggest housing market linked companies to confirm just that. Now on Thursday, Zillow plunged as much as 13% in late trading Tuesday after a dismal outlook stoked investor fears that rising mortgage rates will spark the next crash in the U.S. housing market. The company, which last year suffered tremendous losses of more than $500 million in its home flipping segment, and we did cover that here, resulting in a record write-down, projected that its internet, media, and technology segment will bring in $134 million to $169 million in EBITDA in the second quarter, according to a shareholder letter published on Thursday. While some home sales usually pick up in the spring, Zillow's outlook indicates that soaring mortgage rates and low inventory for sale homes will finally slow activity. Now, we've been talking about that, and it makes a lot of sense. The reason why, as mortgage rates soar, and to say soar is an understatement. We've never seen in the last 100 years mortgage rates spike on a percentage basis so high and in such a short term. Remember, 30-year fixed mortgage with good credit was 0 points, 3% fixed the first week of December. And to say now, 5 months later, that we're looking at literally almost a doubling of mortgage rates in that amount of time is unprecedented. So of course, people can't afford the mortgage rate because contrary to popular belief, not everybody's out there buying homes cash. And most of those people that you think are paying cash actually have a hidden mortgage tied to it. Trust me, go check out better.com if you want information on that. So it says here, Zillow's co-founder and CEO Rich Barton played both good cop and bad cop. That's because he doesn't want his stock collapsing. And in the company's press release, issued a somewhat upbeat outlook. Here's the quote. It's hard not to laugh. While the housing market outlook may be choppy in the near term, today's first quarter results, together with our strong brand, audience, and balance sheet, demonstrate how well positioned and prepared Zillow is to forge ahead. You know, that is really nice. That's a nice way of putting that you're collapsing and that you're losing sales because there's less people looking at your website because they're more and more depressed because they can't afford the homes. That's an interesting thing. Matter of fact, there's also less homes being listed on your things aren't looking good at all. I'm actually surprised. Good job, Rich. He says, but however, in an interview with Bloomberg, his take was less cheerful. Here we go. Now again, that was the I had a lot of time to think. This is what I'm going to say in my press release. Then when in front of a reporter, this is what comes out. This is the quote from the same guy. The market is softening. Full stop. Actually, full stop is not softening. It's dead. It's done. It's over. Put a bullet in it. She's done. But he likes to hit play. So it's softening, full stop. Okay, cool. Barton said, adding that the toughest macro lens is that inventory levels continue to plummet. Well, no duh. Right? I could have explained this. You should be watching the Economic Ninja channel. The reason why inventories are plunging is because nobody has the money to sell the house and buy a new house. It's very simple. I don't know why I just busted into that, but the ninja was inspired. Put down in the comments section what kind of accent you think that is. All right. So it says, as Bloomberg writes, Zillow's dire outlook caps a tumultuous period during which it shut down a foray into flipping homes and shifted its focus to housing super app. Yep. Yeah, that's what happens when you're losing. You have to try something else. Reinvent the wheel. To integrate home tours, financing, seller services, and the company's partner network. Look, guys, this is very simple. Again, I'm going to link the story below. Zillow is cratering because the housing market is cratering. Zillow knows, and Redfin knows, and other housing apps know, like Realtor.com, that our market is collapsing, and it's evident because inventory has shrunk. And again, I get it. Someone in the comment section is, well, not in my area. Homes are selling super fast. I get it. There's still a bunch of stupid people in your area buying up homes at the top. Now, unless the Federal Reserve changes course and says, you know what, we're going to either lower rates, which there isn't many bullets in the magazine, if you know what I mean, or they decide to turn the current 30-year government-conforming fixed mortgage, into the 40-year, thus lowering interest payments because you're amortizing them over an additional 33% or 10 years, well, then that changes things. But I don't see that happening anytime soon. So quite frankly, as you should not be taking any of this as trading advice, because I'm just a dude with a bro hawk and a dream in a crummy hotel, by the way, think about it. Right now, inventory is plummeting. Nobody has money. Plus you're coupled with something you've never seen in the last 100 years. Unbelievable inflation, supply chain shortages, an upcoming food shortage, and people, quite frankly, losing their minds. Guys, I hope you got something out of this. Please put in the comment section, are you buying real estate? Are you selling real estate? What are your plans with real estate? And let me know what you think. All right, guys, that being said, the Economic Ninja is out.